Hi, everyone. I'm Rick Bensignor. Today is Tuesday, June 1st, and welcome to this week's In the Know Trader show on StockCharts.com. Today's agenda is going to be I'm going to show you the whole thing all at once because I'm purposely going to spend the entire show looking at the technology sector of the S&P 500. And you'll see here the list of names are all large cap tech names. And the reason we're going to concentrate on tech for the whole show is that most of tech has kind of petered out and it's going nowhere, whereas the S&P itself is last Friday to end the month of May, closed within 1% of all-time highs. Tech names generally are not anything close to 1% of all-time highs. And there's been some pain in the sector over the last few months. So I figured let's spend the bulk of the 30 minutes that we have together going through all the key things about tech. So we'll start out by looking at the Qs, which is the NASDAQ 100 ETF, right? QQQ. We'll look at the XLK, which is the macro sector ETF for the SPDR one. So that is the S&P Technology Index itself. And then we'll take a look at Kathy Woods' ARK Innovations Fund, which has become a very popular fund. And, you know, she invests in this particular fund. She invests in what she thinks are future leaders. This topped out, saw a rather precipitous decline, came back, and even as of today is starting to stall again. So we'll take a look at that. And then we'll go through the biggest names, and I've got about 18 of them here. I doubt we'll get to all of them, but we'll try to make our way through some of the more popular names in technology, and I'll give you my thoughts on what the charts look like. And that'll be today's show. So all about tech. A reminder, we have a weekly ETF Tactical Trader Report that comes out Thursday nights these days. Used to be Wednesdays. We now pushed it to Thursdays. We call it the Tactical Trader Report, the TTR. And in it, I give you a macro view of what's going on, usually in the broad market, bonds, the dollar, gold, and then we get into a new trading idea each week, a new ETF, and review all open positions that we have. This is done very well. Most of our losses are small, and several of the gains are double digit or more. So from a trading point of view, and again, it is intended for shorter term trading. Now, sometimes we do end up holding a position that's just going our way and we'll ride it for months. But generally it's, you know, weeks to a couple months is the intended holding period. And it's done quite well. And the other report that I do, which we just released last night, is our monthly 7-Eleven SPDR sector report. And this has had phenomenal success. We started last August 1st. The goal is to beat the S&P's return by being in anywhere from no less than 5 or no more than 7 of the 11 SPDR sector ETFs. And what are those? XLK, XLE, XLI, in other words, you know, industrials, technology, consumer discretionary, consumer staples, utilities, financials, etc. Each one of those 11 sectors has a SPDR ETF. All 11 combined will create the results of the S&P. And our goal is to avoid the underperformers and overweight the outperformers to outperform the S&P. And trying to do that is the goal of most money managers on the street who are certainly long onlys meaning mutual fund portfolio managers who are benchmarked to the S&P, and very few, historically only about 1 out of 7 can outperform the S&P over time. We started this last August, and as of the end of May, which was Friday, we have outperformed in the, what do we have, 10 months now? Let's say June, yeah. In 10 months, we are outperforming the S&P by 341 basis points, or 3.41%, which is huge. And if you're a money manager and you're benchmarked to the S&P, so if you're a financial advisor and you want a really easy way to get your clients in the market without doing a lot of stock picking, but you want to beat, you want to kind of show them that you can do better than the broad market, this is a great way to do it. It is very reasonably priced. It's under $100 a month. And if you sign up for a year in advance, it's well under. This is really super priced. And again, 10 months into the year, we're outperforming by 3.41%. That is an average of 34 basis points a month. And if you're in the money management business, that is huge. It might not sound like a lot, but when all you're trying to do is come close to the S&P, we're beating it. And we do it because we combine both technical and quant models to be able to allocate to the maximum of 7 ETFs that we're in at any one time. And it's working, and it's working well. So check that out at inthenotrader.com. And of course, my email address is rick@inthenotrader, and you can reach me anytime. All right, let's go to the charts. Here we are. We're going to start with QQQ. All right, so the NASDAQ 100. These are weekly charts that we're going to look at. So, all right, so we topped early this year. We pulled back to the clouds baseline, this orange color line. We tested the highs and made slightly new ones, but notice posted an aggressive sequential signal the week that made the high, and we have paused since. On the downside, Friday closes beneath 324.67. That follow a week before that was an up close is likely bad news. Certainly at this point, if we get beneath 320, that would suggest we're going lower. But notice, the stall that's been in place since the 13 showed up, just like it was last summer when we got a couple of 13s and we kind of went sideways for a while before pushing to new highs. Now look, ultimately I'm bullish the market. Credit spreads on the fixed income side that are important ones are not showing reason to be particularly concerned that any major sell-off is at hand. The credit spread we watch is actually closed on the lowest level it has in years last week. So if the credit market is not showing any stress at all, it's unlikely that the stock market is going to have any major decline. That doesn't mean we couldn't sell off a few percent or even 5%, but I don't even see a 10% decline in the making for the S&P, simply because credit spreads are as strong as they are. So I'm bullish the S&P. I do think we'll push to new highs, but we don't have to have any major up move at this point. I think it's, we're going to meander in both directions. And when things look really bad or really good, it's probably the extreme of a move for the near term. Just getting back to this chart, notice that the MACD has made lower highs. The market made a higher high, so that's a negative divergence. Just goes to kind of show that tech is still somewhat stalled. All right, let's look at XLK, which is going to look similar. Same thing, slightly higher highs that were made in April relative to earlier in the year. Notice the aggressive sequential signal just came in last week. So still, suggesting that there's some risk in buying here. However, if you look at the baseline held the low, the baseline held the low, the baseline held the low. So you kind of have a good clue too, that in XLK terms, if you'll see the baseline value is 133 1/3. As long as we stay above that, we're okay. Friday closes beneath that probably means we're heading down towards 126 and change. as just a simple initial target. Same thing here, lower highs in the MACD. And let's look at Cathie Wood's ARK fund, which is going to be much more volatile. This peaked out in February, came right down to our target. We were monitoring this in our institutional report. We caught the lows at 98.20. The low of the whole move is 97.22, and it bounced about 15% or so into last week's high. A little more than that, but you can see now the conversion line, which is the first support line or potentially the first resistance line, is acting as resistance over the last month. The highs were up in here against the pink line, and now you're seeing the last 2 weeks here too. If this Friday closed under 106.94 and next week gap lower and took out this week's low and closed down, then it potentially opens the door for a move that gets beneath 98. I don't really think it's likely to happen, just because I'm not negative market. So that's a look here, and of course you're going to have some cloud support. All right, now let's just move quickly into as many of these tech charts as we can. We're going to start with Apple. Apple also made higher highs to begin this year than we saw last September, but now, of course, it has a very valid downtrend line that can be drawn. This week is a set of 5 right now. If we close less than, this is always referring to the close versus 4 weeks prior. So in this case, we're going to be a 5 down if we close less than one's close, which is 130.21. So Apple would need to rally about $6 from current price in order to kill this count. Otherwise, it still may be heading down towards its cloud over the next and 107 and change over the next month or so. I don't think it's going to get worse than that. Notice here too that we've got higher highs in price, lower highs in MACD. So no real reason to rush in and buy Apple right now, and I have a feeling that may be the same for lots of the names. Let's move on to Microsoft. Microsoft, better looking chart, made highs here in April. Very different look than Apple. You really can't draw a downtrend line yet that's significant. We won't know if, look, we have the top point. Last week, we may be able to draw a downtrend to that line, but we won't know until this week's over, because if this week goes higher than last week, then no, that's not a valid place to draw a trend line. This tends to get some support near its baseline. We had a minor breach here. But Microsoft certainly better looking than Apple at this point, has stalled right against the stop out levels from these 13s at 260-ish. So this really needs to hurdle back to think that next we can get up to 274 and 277 targets. Again, if this sold off, I don't think we likely get much worse than the cloud. Visa. Stalling also with some 13s that have stalled price. The stop outs on the 13s have basically been right near the highs. The penetration through the stop out line was not qualified and confirmed. And you can see we're still beneath 232-ish, which is kind of the key level here. If we sell off, look for 215-ish for initial support. And if it got a bigger sell off, same thing, top of the cloud, 200-ish. I don't think it would get much worse than that. NVIDIA. Last week, actually looks like this morning, made all-time highs. Gapped up and strong chart. Near term, a little bit of, we can at least draw a small uptrend line from this low to this low. And by the way, I want to show you something. I had told you this months and months ago, but for those who, never caught that show, oops, I'm trying to get rid of here. If you're going to draw an uptrend line, I'm going to, in order to have a point, I want to have higher lows on either side of the points that I'm going to draw my trend line and connect to. So I'm going to take this low and connect it to not this low here, the second bar near each other, but actually the first one, because this bar here has a lower low than either price bar on either side of it. So this is the correct place in my mind to draw the trend line, even though the next week has this, if I blow this up, you'll see it slightly breaks underneath. And a lot of people here are going to draw then this low to that low. To me, that's not the right one, because you can see the low this week was 538.36, and the low the following week is 541. So you want to connect the lows to each other that have higher lows on either side of the price bar. So here's a minor uptrend line. This still looks like it's heading higher, 679 to 710-ish. So NVIDIA, strong looking chart, one of the best. Mastercard, whole slew of 13s over the last 6-7 months. Each one kind of gives you a minor pause or close to it. Certainly this one back here went 10 weeks without progressing, but you can see there's lots of upside exhaustion signals here. Nothing's broken through the stop outs of those levels, which are both 397 and change and roughly 409. And again, we may be able to draw a trend line from that high to last week's high, as long as this week's high doesn't take out last week's high, and then you have just a minor downtrend line. Look for support at the top of the cloud. MACD has crossed negatively, so this is also kind of a name I don't need to buy right now. PayPal made all-time highs back in February. This does have a valid downtrend line we can draw. So for right now, that's it. We pull through it a little bit this week. If we close lower this week, then next week, if we don't take out this week's high, I could adjust that trend line if I want from here to the newer higher point. But look, we also have a minor triangle this way too. So let's see if, which way this breaks either way. And in the bigger picture, if this came down to near 192.67, which is the TDST line, it's also where the cloud is. So, somewhere down in here under 200 is probably a place I'd be interested in buying PayPal on a pullback. Right now, MACD still showing weakness and, no curl up to show that it's not still having downside momentum. Intel, totally different looking chart, right? This, I'm actually going to remove the cloud because the cloud is not helpful in a sideways stock. And let's take a look at how long this has been sideways. So pretty much you've got this major bottom somewhere where I've drawn, and now you've got pretty much a double top. So that's your trading zone right now. Same type thing. If this is trading in a range and you've got a negative cross here and you're mid-range and you're still in a down count, no reason to be a buyer. Notice how many times this turns on weekly setup nines. Top here, near a bottom, that led into the 13. Here a 9 a week or two before the top. Here a 9 very close to the top. Here a 9 a few weeks before. But if you combine it with the range, it tells me I don't want to be a buyer probably until we get down near 49-ish and change. And that's, that's kind of how I read this now. A qualified and confirmed close above 59.74 or 59, where is that? 64, 59.64. If you properly break above that, suggests that you can get back towards the upper end of the range. But I'd just be patient here and wait. No reason to buy right now. Adobe. So double top on the 13s, also somewhat of a trading range. We have a minor, well, here I could even draw this probably as a channel. So if I take the all-time high to that high, connect the bottoms, that's kind of, you can see the trading range here. Now off of this 13, we sell down to the propulsion exhaustion level. We've bounced if this Friday closes beneath, let me unshade this channel so I can see the actual level. So if we close beneath 496.41, and then next week gaps lower, takes out this week's low and closes beneath this week's low, that refreshes a new sell signal. You cannot get a buy signal this week. But if we get buy signals in the next 2 or 3 weeks, and they're proper, it would suggest this is going up to 561. So right here, I'm just going to watch. I like that MACD is bottom that potentially could be moving upward, but this right now is still in this channel, and I've got to get a new signal, either a buy or sell off of these propulsion momentum levels to help me determine what to do next. So nothing I need to do right now. CRM is the next heaviest weighted, and similar, we've got a channel here, and last week was the first 13 since looks like late 2019. Has to properly get above 244.24, which it doesn't matter if it did it this week, it wouldn't be a proper breakout. But you've got here, kind of watching if it rallies. Your upside levels are 267, and then 325.80 is actually the stop out on the 13. So if this were to get a proper breakout over 244.24, then this thing's got room to go. Otherwise, it's still in a consolidation. Let's see if the cloud helps at all on this. Yeah, on the downside, I'd look for support versus the old low here for the 2021 low near 200. And I don't think it gets much worse than that. Broadcom, slightly different looking chart than we've seen. So here, we'll just, so obviously that trend line broke. You've got a double bottom that way. So double bottom, multiple highs, pure trading range. Let's blow this up a bit. See what we got here. So 13's near the highs, sideways since, double bottom, triple top, 2 weeks away from another 13, stalling against the 479 level, which is the stop out level. And again, you've got to properly break above that. You can't do it this week because last week was an up close. Propulsion targets at 489.5 and 519.40-ish. Not much to do here too, and you're on the upper end of the range. So if you're interested, you buy a pullback. But this is range trading so far. And until it breaks out to the upside and we get higher targets, you got to break above 500 to get those higher targets. And this is simply range trading. Probably could use an RSI, something like that, to figure out overbought and oversold. We got down to 50 on the low. It didn't come close to the oversold. The last time we were oversold was on the 2020 sell-off. So I'm just curious of a daily chart. Yeah, daily charts got a lot closer to overbought and oversold, and notice where those 13s are. Pretty amazing. Okay, next. Cisco. Let's take the RSI off. Alrighty. 9 high, 9 low. This 9 not a high led to the 13. You can't do a 13 without a 9 count. So right near the highs, stalling 2, not near its all-time highs, which were made back in December of 2019 on an aggressive sequential signal, same signal that just showed up recently. So, this has recovered well. You're getting close to a MACD crossover here. If we fall, look for support near 47.5. And if you can hold that level and not properly break underneath, then Cisco may finally have enough of a base to move higher over time. I don't know, but I think if I want to be a buyer, down near 48 is probably where I want to do it, not 52.5. And even this looks like, let me take the cloud away for a second, it'll be easier to see. There is some type of channel we can draw from this low to this low and take the high, oops. We'll take this low to this low, plot the highest high in between, which is that high. And that's kind of, it's been working on the high end here. If it doesn't progress, then I could easily see this falling back to 47 and change. Upside targets are 55.22, 56.17, and then all the way up at 60. So right here, I'm kind of just watching and waiting. Accenture, ECN, as we've got, I don't know, less than 2 minutes or so left. Pure uptrend looks like, let's see if it is holding the actual trend line. No, that one broke. We can draw this one if we want, and that one is valid, as is this to here. So we'll change colors on this just so it's easier to see. Let's make it nice and bright. So there's an R. So from the low, we're still valid. And even if we take this low in here, so you're still holding on, but notice, 9 on the top, 9 on a high here for a few months sideways, now 9 pulling back. If this trend line breaks, look for support at this one. But if we get a bigger correction, this does a 9 down over the next 6 weeks, look for the $5 either side of 250 looks like the place to be a buyer here. And the only upside targets we really have now are 302. And we got as high as where? 290. That's that. Here's another potential peak. All right, we'll do, let's see, that's just my own. I'm telling you, we're just about out of time. So let me do one more just because I like to get as many as possible. Texas Instruments. Right near highs, 13 on the high, still strong, trend from that 2020 low. Let's see, we've got buy, no signals are active. Nothing much in here. Let me just pull up the cloud. So same thing, holding the baseline and pullbacks. We got a more substantial pullback, look for 169 or 155 as support, and I don't think it gets worse than that. So that's it. A lot of these, kind of we're buyers on pullback. That's because we like the market still over time. Hope you enjoyed this. This has been a real good look into the technology sector. I'm Rick Bensignor, and this has been In the Know Trader.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.